What is good, gang? Ben here, and today we have the longly awaited daily bias video. Now, my goal for this video is to hopefully make this the last daily bias video that you guys ever need to watch, and hopefully, with our time together today, I can accomplish that. Now, before we get into it, I do want to go over a couple of things. First, just like day trading is not everyday trading, being able to identify the daily bias or likely draw on liquidity for the daily candle does not mean that we should be expecting to do this with high probability every single day, and it should not be the goal, nor is it required to be profitable in this industry. So don't set unrealistic expectations for yourself. Secondly, all of these concepts are fractal, as what I'm going to be doing to form my daily bias. I'll be doing the same process on an hourly or 15-minute chart. Nothing changes just because we're jumping up a time frame. Only that these levels from this time frame, when moving into a fractal or lower time frame, hold weight. And lastly, our daily bias is really going to be starting off from our expected weekly candle expansion, and we should primarily, especially for newer traders, be looking to engage with the markets in line with the weekly time frame. Now, taking a glance at our weekly chart here, order flow is clearly bullish. You have sell side taken here, swing high violated here with displacement, secondary shift in market structure, order block created, and I want you to note this fair value gap here. Extend that out in time. Candle bodies respecting fair value gap. Bullish order flow, we're recreating order blocks and respecting them on a weekly close basis. Now, this week in particular, I'm expecting an outside week, which isn't ordinary, and I don't recommend forecasting that when you're getting started because there's other criteria. But we had a inside week last week, and we do have a very heavy hitting news event this week in the form of CPI. Now, for me, I'm looking for buy side to be taken and then shift sell side. But let's move into our daily time frame. Now, here on our daily time frame, we reaffirm that order flow is clearly bullish. And I'm going to drop on some quick annotations here. So, realistically, we are looking for the daily order flow. We are looking for liquidity and our premium and discount arrays. So as I said, order flow in this example is clearly bullish. And running through a sequence of events, we have sell side liquidity purge, shift in market structure on the daily with displacement, leaving behind fair value gap, order block, volume imbalance, price trades back into an existing volume imbalance, and then displaces higher, consolidates for a bit, and then this high actually slightly purges this high, but leaving relative equal highs. We then saw distribution towards the end of quarter 4, and then consolidation on a discount array in the form of this bullish order block. From there, we saw displacement, leaving behind a fair value gap that we reclaimed later to displace off of. And since then, we've been making clear one-sided price action of creating discount arrays, whether fair value gap, order block, and respecting that. So bullish order flow is very clear here. And these are the market conditions that you want to be looking for. As many of you know who look through my content or follow me on Twitter or in my Telegram, I follow where I see clean daily order flow because it makes it the easiest to participate in. Now, last week I gave bullish guidance, and on Monday I said that my narrative might take a little longer to play out, and we're seeing that happen here. We had Tuesday high of the week weekly profile last week, which on Friday we reached a discount array in the form of this daily order block, which we got a bullish close off of, which this is we reached an objective. We took out these relative equal highs here. We retraced into a discount array in the form of this order block. We got a bullish response. So fractally, we can look for premium arrays to be met. Now, I sent out the draw on liquidity that I was looking at for today, which is bullish, and I was listing off a series of PD arrays from this time frame. I mentioned PD arrays in the form of the weekly opening gap, high, low, and consequent encroachment. I mentioned the daily fair value gap here, the high as a potential draw, and then the mean threshold of this mitigation block. And that is the essence of daily bias. We are, just like our order flow lesson, we are looking to pair discount arrays with bullish arrays in bullish order flow. It does not need to be more complicated than that. The issue that many people have with this is translating this into the lower time frame. But we'll take this one step further. So based on this response from this order block, we've already determined that bullish order flow has shown signs of coming back into the marketplace. Now I'm going to chart a few of these PD arrays that I mentioned. Here's our weekly opening gap low. High. And our consequent encroachment. As well as CE, consequent encroachment of this wick on the daily candle here. Okay, now let's drop into a lower time frame. Here is our hourly. Now, this might look much clearer now. And we're going to be looking for the same signatures and price that we were looking at the daily for on the 1 hour. Right? We've reached a daily discount array. What do we see? We see price runs out, pools of sell-side liquidity, and on Friday, makes its way back above a swing high. So where does that leave us? This leaves us a shift in market structure. It's not pretty, but is a shift in market structure. Now, for everyone who follows my channel, I like to look at a shift in market structure as external to external. So we've created a new range. So let's find equilibrium of this range. right here. So price takes sell side, partially mitigating a discount array. We get a bullish shift in market structure off of that. After that, we have a short-term discount reached here. Now you could take this one step further and look at this old sell side imbalance, buy side efficiency right here. That gets inverted. We should expect to see this used as resistance. It instead gets violated on the upside and flipped into support, which we then see further displacement off of. So you've already framed bullish order flow on the daily chart. You framed bullish order flow on the 1 hour chart. So now all we're doing is simply looking for these same signatures on a lower time frame to hypothetically engage in price. Now, on this time frame, you have a couple arrays because technically we make another shift in market structure here. So we can expect retracement ideas before expansion. So what are some discount arrays? We have this fair value gap that gets mitigated, but we also have a few more things. This is a breaker block. Here's a swing low. We made a new swing high and then a lower low and then a higher high. So this is a breaker block here, which I'll annotate in a second, but we also have this, which is our new week opening gap. Here and here. We gap, come through it, break back above it, and then use it as support. I'm going to put consequent encroachment here as well. Now let's zoom in even further. So we framed bullish order flow coming into the day on the daily time frame. Intraday, we have framed bullish order flow on the hourly time frame with clear upside objectives. So now all we're looking for is a hypothetical way to engage with price. So here we have candle bodies respecting the consequent encroachment of the weekly gap. I'm not going to pull it up here, but we have SMT at these lows with YM or Dow Jones, which is a sign of manipulation for those who watched my last lesson. So we have manipulation here that we then take out a swing high. We'll use this as our swing high, violates a swing high. Now on this time frame, there's no potential entry if you are using this swing high here. I typically like to look for a swing high prior to the run on liquidity. So you can use this and then validate this as an order block if you'd like on this time frame, or you can use this fair value gap here, targeting these above. Me personally, I traded this even lower time frame wise. I traded this on the 1 minute. On the 1 minute, very clear. SMT at the lows, shift with displacement, leaving a fair value gap here that gets created. Further displacement, two fair value gaps, candle bodies respecting the lower fair value gap, accumulating inside of this old one, displacement, accumulate liquidity, run liquidity, displacement, so on and so forth. So we've determined the order flow on the daily. We have found signatures of the hourly order flow aligning with the daily, and we use the same ideas or concepts as fractally as the 1 and 5 minute that we did on the daily to potentially engage with price. That is the essence of daily bias. It does not need to be more complicated than that, but it does take a lot of time in the charts, in hindsight data, looking for these signatures in price so that you can identify them in live market conditions using the hard right side of your chart. This is not something that just comes really quickly after seeing one video. This video embodies everything that is daily bias to me, but it's going to require hours and hours and hours of study in historical price action and live price action for you to be able to do this with high probability. But I know with diligent study and application, it can be done for you just as it has been for me. So I hope this was helpful. If you like this video or found value in this video, leave a like and a comment and subscribe. If you think I missed something, please also leave that in the comments. I'd love to address any gaps in my educational content. I hope this was helpful. Until next time, be well.